Dear friends, welcome to Petrosult YouTube channel. Today, I will talk to you about standard ISO 55000 asset management.
ISO 55000 Asset Management. Overview. Principles, and terminology. ISO 55000 is a series of international standards that provides guidelines and requirements for effective asset management. This series consists of three main standards: ISO 55000, ISO 55001, and ISO 55002. ISO 55000 Asset Management, Overview. Principles, and terminology. Introduces the critical concepts and terminology needed to develop a long-term plan that incorporates an organization's mission, values, objectives, business policies, and stakeholder requirements. ISO 55001 Asset Management Requirements specifies the requirements for the establishment, implementation, maintenance, and improvement of an asset management system. ISO 55002 Asset Management Guidelines on the application of ISO 55001 provides guidance for the application of an asset management system in accordance with the requirements of ISO 55001. The ISO 55000 series of standards offers a comprehensive framework for the administration of physical assets. Embracing ISO 55000 can offer a systematic perspective and comprehension of asset management, efficient connections between top management, asset management, operations, and maintenance, enhancements in asset financial returns, well-informed asset management decisions, advantages in insurance, health and safety, regulatory compliance, and risk management, company recognition, marketing, advances in training and development. The ISO 55000 standard on asset management characterizes an asset as an item, thing, or entity possessing either potential or realized value for an organization. This definition is quite broad, encompassing various types of assets. To narrow down our perspective, we can acknowledge distinct types of assets typically identifiable within organizations: physical assets, financial assets, human assets, information assets, and intangible assets. It also requires an understanding of possible future advancements. What assets are in our possession? Where are they situated? What is the business relevance of our primary assets? What is the financial status, both gains and losses, of our major assets? How efficiently are our assets utilized, considering peak loads and seasonal variations? Are there notable imbalances, such as substantial shortages, surpluses, or misallocations of equipment or personnel? What is the current state of each major asset? Are issues related to reliability or availability significant? What is the expected remaining lifespan of specific assets? Do significant risks exist? Are maintenance costs a considerable factor? What are the latest developments and market opportunities related to our assets? What assets are available in the market that could be beneficial for us to acquire? Physical assets encompass items like plants, machinery, buildings, roads, vehicles, railways, aircraft, pipes, wires, communication equipment, and various other forms of infrastructure. In addition to physical assets, we also take into account financial, human, and informational assets, provided they contribute to the administration of physical assets. Industries where the management of physical assets holds particular significance encompass those dealing with plant, machinery, buildings, roads and bridges, utilities like electricity, gas and water transportation, oil and gas extraction and processing, mining and minerals processing, chemicals manufacturing, distribution, aviation, and defense. This entails various specialized areas of professional involvement, including asset appraisal, asset acquisition, and logistic support throughout the lifecycle of the asset. However, asset management is distinct from both technical engineering and maintenance management activities. This distinction arises because the practice of engineering or maintenance management demands a different set of time, dedication, and focus compared to the blend of logistic and business considerations inherent in asset management. Asset management is closely connected to financial management, requiring asset managers to articulate their perspectives using the language of accounting and finance. It is crucial to acknowledge the accounting definition of assets, especially the categorization into fixed and current assets. The rationale behind this differentiation is related to how these items are handled for tax purposes. Fixed assets are the tangible items that organizations employ in conducting their business, including equipment and piping. The definition of asset management provided in ISO 55001 is the organized effort of an organization to extract value from its assets. Asset management is the set of activities associated with identifying financial needs, procuring assets, offering logistical and maintenance support for assets, and disposing of and renewing assets. Asset integrity management focuses specifically on ensuring the reliability, safety, and performance of assets. It involves strategies and processes to prevent failures, reduce risks, and maintain the integrity of critical assets, particularly in industries where asset failures can have severe consequences. The goal of asset management is to ensure that the organization possesses assets suitable for its business requirements, and to deliver supporting services that enable these assets to operate effectively. In a more conceptual sense, the objective of asset management is to empower an organization to extract value from its assets, while advancing towards its organizational goals. Asset management aids in achieving value realization by harmonizing financial, environmental, and social costs, managing risk, maintaining the level and quality of service, and optimizing asset performance. The objective of asset management is to offer resources and expertise for facilitating the identification, acquisition, in-service support, and disposal of the physical assets essential for the organization. The strategy for managing assets must align with and engage with the overall business strategy. The asset management function needs to connect with the strategic considerations arising from the business context that will influence asset management plans. Advancements in the business asset scenario usually involve the following: trends in the demand for products or services, trends in the type or level of products or services required, changes in revenue, costs, or profitability, such as those resulting from competition, opportunities for new business and/or business development, technological advancements, gaps in asset capability, deficiencies in capacity and/or ability to fulfill the required asset role. Timing considerations, when assets are needed and the associated lead time.
Strategies for acquisition, supplier options, age and remaining lifespan of existing assets.
Regulatory limitations, opportunities, or changes. Asset conditions, ensuring adequate service levels, reliability, and availability. Risk factor availability, capacity, health, safety, and environmental concerns. Business acquisitions, divestment, sale, or phasing out. Redeployment of assets, changes in operating practices. Decisions regarding equipment replacement, leasing, outsourcing or insourcing of services or functions. A policy statement is an expression of the overarching goals or principles embraced by an organization. ISO 55001 mandates that an organization articulate an asset management policy. The policy must serve as a foundation for establishing asset management objectives, encompassing a dedication to fulfilling asset requirements and a commitment to continuous improvement. ISO 55002 provides a definition for an asset management plan as follows: documented information outlining the activities, resources, and timelines necessary for an individual asset or a group of assets to realize the organization's asset management objectives. An asset management plan entails the specification of activities, resources, timescales, responsibilities needed for the asset or group of assets to accomplish defined objectives. Plans are derived from the maintenance, repair, overhaul, and replacement activities, as well as logistic support required to maintain the assets. This ensures they can consistently deliver the expected level of service within a defined timeframe. A strategic asset management plan, SAMP, as a document outlining the organization and operation of asset management within the entity. ISO 55001 mandates that organizations must create a SAMP, Strategic Asset Management Plan. The SAMP is mentioned in various clauses throughout the standards as well. Input into business development aspects related to assets during the conceptual planning stages. Contribution to pre-feasibility and feasibility analyses for asset developments, including requirements analysis and input to financial analyses. Formulation of recommendations, process improvements, replacement, and refurbishment. Compilation of business cases for asset-related activities, involving proposal preparation, evaluation, and advisory roles. Preparation of asset-related input for capital budgets, CapEx, and OpEx. Life cycle costing. Management of asset acquisition and/or development projects. Development and implementation of logistic support policies. Oversight of the introduction into service. Establishment of maintenance policy and procedures, e.g. liabilities-centered maintenance. Application of asset-related technology, e.g., new equipment developments, condition monitoring developments. Management of asset policies concerning health, safety, environment, and security requirements. Management of tort provision, effectiveness, and audit. Planning and provision of maintenance facilities and resources. Maintenance outsourcing strategy and management. Configuration management. Contribution to the selection, implementation, and user support for asset management information systems. Technical input into the structure and development of computerized asset management information systems, including identification and coding. Updating of the asset register. Assessment and decisions on asset renewal, replacement, and overhaul policies. Organization and executability and availability tests and evaluations. Equipment redeployment for asset management reasons. Equipment disposal. Conducting special studies related to assets. Assessment of asset implications arising from changed operating practices. Development and management leasing policy. Identification and establishment of asset-related emergency response strategies. Management of incident reporting systems, fault and failure reporting systems, and responses, including root cause failure analysis. Systems for spare parts management and including roadable repair parts policy and management, insurance spares. Organization and evaluation of pilot studies and trials. Collaboration with stakeholders on asset-related topics. Assessment and recording of asset condition. Asset valuation. Change management. Decisions on the implementation of modifications and technical improvements. Cost-benefit analysis. Introduction and implementation of geographic information systems. Physical identification of assets. Formulation of repair, replace policies and related decisions. Level of repair analysis. A policy statement is an To fulfill the business objective, business operations are essential, and they rely on the support of physical assets. Asset management functions to supply assets that support the business operations. Asset management operates to supply assets that facilitate the business operations. This necessitates an asset management system that facilitates asset planning, acquisition, maintenance, and logistics. Additional support services, including information technology, financial, and legal services, are also necessary across all activities. The asset life cycle refers to the entire span of stages that an asset undergoes, from its initial acquisition or creation, through its operational use, maintenance, and potential upgrades, to its eventual disposal or decommissioning. This concept encompasses all phases of an asset's existence, emphasizing planning, acquisition, utilization, and end-of-life considerations. It is crucial to organize the institution in a manner that ensures the effective execution of asset development, acquisition, and operation. Business functions like sales, operations, finance, and human resource management are often clearly delineated in the business structure. In contrast, asset management may fall into a more ambiguous category, situated under senior management but above the maintenance level. Insufficient attention to asset management can result in issues arising from ineffective communication between operations and maintenance, as well as with senior management. This pertains to comprehending both the physical conditions and the financial measures required to tackle an existing or potential issue. Effective asset management yields the following advantages, allowing an organization to deliver business capability efficiently and achieve its goals in terms of profitability and service delivery. A methodical approach to decisions based on assets, ensuring that asset requirements, acquisition, and disposal align with the business objectives. Suitable logistic support throughout the asset lifecycle, fostering enhancements in asset performance. Efficient internal processes for asset management. Aging assets refer to the assets that have been in operation for an extended period, typically beyond their originally intended design life. These assets may experience physical degradation, wear and tear, and changes in operational requirements over time. Organizations perceive no advantage in it, cease additional spending, and reduce the maintenance budget. Expenditure on minor issues decreases, and over time, these minor issues escalate into significant problems. Ultimately, a major accident ensues, leading to financial loss and disgrace for those unfortunate enough to be involved. This scenario is referred to as the asset death spiral. In March 2005, a blast occurred at BP's Texas City oil refinery, resulting in the death of 15 individuals. This incident marked the most severe industrial accident in the U.S. in over a decade, triggering lawsuits and investigations. The U.S. Chemical Safety Board stated in 2006 that stringent budget cuts throughout the BP system caused a progressive deterioration of safety at the Texas City refinery. Thank you very much for watching the video. You may consider to subscribe, like or sharing the video, if it is worth doing. Petrosult and Unimart. Consultants and trainers provide services of asset integrity management to oil and gas production fields, petroleum refineries, natural gas processing industries, petrochemical industries, chemical process industries, ammonia-urea industries, and power generation plants. Website: www.petrouni.com. Email: info@petrouni.com. Phone: 009232323677750.